Hello, I'm going to give you a fairly short lecture on the child tax credit and credit for other dependents. I'm going to follow up this video with another video that walks you through the child tax credit and credit for other dependents worksheet that's in publication 972. If you don't have your textbook with you, I'd like you to pause the video and go obtain that. We'll be focusing on pages G2 through G6. I provided a link in the introduction page about 10 facts about the child tax credit, and I'd like you to review that document there, and also we're going to touch on those points here as well. We've already learned a bit about what the difference is between a refundable and a non-refundable credit. What makes the child tax credit a bit interesting and certainly maybe confusing is that it has elements of refundable and non-refundable in them. So we're going to highlight the difference between that in this video. We're going to be focusing on this concept here of adjusted gross income and specifically what's called a modified adjusted gross income. The Form 8812, which I believe we've talked about previously, hit on it at least. You should be able to find that if you've brought your tax forms home and be able to turn to that when we get to that section as well. So this credit is a non-refundable credit. The deduction, or the credit amount I should say, is now up to $2,000. This is new, and it has gone from $1,000 to $2,000 now. Again, it is non-refundable. So we're going to talk about the limitations on this $2,000 credit as well as the modified adjusted gross income. In other words, you can't have 10 children and thus a $20,000 credit. So we'll talk about those in just a second. If somebody does not qualify for the full amount, and of course there's limitations which we'll hit on here, they may be able to take the refundable additional child tax credit, and that form is on 8812. So if you're looking in your tax book, if you're on G2, you notice at the very top there you have the child tax credit information. And on the bottom of that same page, G2, you're going to have the additional child tax credit, and the eligibility requirements under both are on that page. They are separate. The child tax credit and the additional child tax credit are different. Notice that we just said at the top here, if you're making notes in your book, that the child tax credit is limited to $2,000, which we've pointed out here. Notice though that the additional child tax credit, bullet point number 3, states that it is limited to $1,400 per qualifying child. Let's focus in a little bit on the difference between those two. To be eligible, notice that your eligibility has to do with basically a qualifying child, but we're also going to talk about other dependents. And you can read up on those other dependents starting on page G4 all the way over to G6. So the very first part of this textbook talks about dependents, and then on G4 it talks about other people within your family that you may take care of as well. So some of the important points here that we're going to talk about is that it must be part of the taxpayer's dependency. So this is generally eligible for a child who meets certain age restrictions. And you notice on the child tax credit G2 at the very top that dependent needs to be under age 17 at the end of the tax year. Under age 17. There are special rules for divorced or separated parents as well as for parents that live apart. And I'd like to point you in the direction of that in your textbook as well. So if you're on page G3, at the very bottom, in the right-hand column, you notice that there is a section, it's pretty small print actually, it's a small section there, children of divorced or separated parents. You notice that if you recall how divorced and separated parents work from claiming them as any other credit, generally speaking, hopefully this will gauge your memory a little bit more. Generally speaking, that one parent will have had to have signed over or had an agreement within a divorce document. But if that has not been instated, now bullet point number 1 says the parents were divorced or lived apart at all times during the last 6 months. They would obviously qualify as being divorced or separated. Number 2, the child received over half of his report for the current tax year from the parents. So this child was not on their own, which is interesting because notice that the age requirement is under age 17, so 16 and below. So that would be somebody that would be, that was my dog coughing, by the way, would be somebody that's 16 or younger providing their own support, which is probably unlikely. Bullet point number 3, the child was in the custody of one or both the parents for more than half of the current tax year, and or the custodial parent signs that release form. So generally it's somebody that provided more than half of their own, provided half of the support for the dependent, and they lived with that child for more than half of that year. So it is same qualifications for, as we talked about at the beginning of the semester, for credits. All right. So that amount of that credit, let's talk about how that amount gets reduced. It's pretty interesting to know for most people that the modified adjusted gross limit for this tax year is really high. This year in particular, the modified adjusted gross income for married is $400,000, and for single it's $200,000. What that means is that if you are a married couple, or a single person for that matter, and you make over $400,000 if you're married, $200,000 if you're single, you're not going to be eligible for this credit. Everybody else is eligible for this credit up to certain limitations. We're not going to talk about the graduated table. Just know those limitations. And when I talk about graduated table, I mean, yeah, if you are a married couple and you earn $250,000, you may not get the full amount of $2,000 per child. You may get some lesser amount. We're not going to look into those lesser amounts. Just know that this tax amount here, this limitation, is very high. The government's hoping that the majority of people are eligible to take this, obviously. Depends on the filing status. We just talked about the modified adjusted gross income, and here this tax liability. As I mentioned way back here, this whole section, tab G, is called non-refundable credits. What that means is, let's get some examples going. So let's just say that we have a tax liability, meaning that you owe the government $6,000. And this is what you owe. And you're able to take this $4,000 in 2 kids. That means that you would only owe the government $2,000. It reduces the amount of tax liability that you owe. If, on the other hand, you had a $3,000 liability that you owe and you were claiming this $4,000 credit, even though it looks like you would get another $1,000 back from the government, they're not going to give you that. It just means that your tax liability is now zippo. Okay, that's why tax liability is a big part of this credit. Can talk about that, which I just did. This maximum amount of child tax credit is this tax liability less that is this example that I just gave right here. Let's talk about how to calculate it. Roughly, when we're talking about calculating it, we're going to be looking at this child tax credit table, and I'm going to do an entire other video just to go through the numbers of it and give you an example instead of embedding it in this one. So in case you have a question on just the content, you can listen to this video. If you have a question on the calculations, you can do the other video. Here's some information on TaxSlayer as well. Let's now look at the additional child tax credit information, and you're going to find that information on the bottom of page G2. So if, for example, somebody is limited and they don't get this $1,400, and why is it $1,400? Because that is the amount that is in that graduated table amount. So you don't need to, just don't even focus on the 1,400, just focus on the words, the taxpayers who do not get the full amount of the child tax credit. They may qualify for this refundable additional child tax credit. So if I'm making notes in my book, I would put at the very top of page G2, child tax credit non-refundable, and I would put on the bottom of the additional child tax credit amount, I would put refundable. So non-refundable for child tax credit, refundable for additional child tax credit. That's an important part because, and what makes this credit somewhat confusing. There's some really fair amount of limitations. So anyone with an earned income over this $2,500, the credit is based upon one, the lesser of either one of these. So generally, anybody that has a job, right, or even, gosh, just worked over summers, I suppose, had this and had a child under the age of 17 could qualify. The credit is based on this 15% of the taxpayer's earned income that is not more than $2,500, or the amount of the unused child tax credit, which is whichever is lower. So when I gave you that example on the previous slide, and I had talked about somebody having a tax liability of $6,000, and they were able to claim a $4,000, this wouldn't apply, right? There's nothing that's unused about that. But in my second example, I told you that they had a tax liability of $3,000. They had a child tax credit of $4,000, and I originally told you that that $1,000 was not going to be able to be used under the child tax credit. That $1,000 could potentially be used depending on the tax liability, their modified adjusted gross income, and their filing status. They may be able to use that $1,000 under the additional child tax credit. And I'll go over those calculations in more detail in the next slide there. Now we're going to talk about other dependents. And again, that focuses and starts on page G4 and goes through G6. We've already talked about other dependents and who qualifies, so I'm not going to go over that. I would go back to the beginning and kind of review what is under those stipulations to qualify for a dependent at the beginning of your textbook. Notice here that we have a $500 credit for other dependents who do not qualify for the 2000 child tax credit. Here are the stipulations, and I will go to your textbook as well. And I would turn to page G6. Notice that that dependent for that $500 other dependent must be a U.S. citizen or resident. They must have a valid Social Security number or some identifying document here, ITIN or ATIN. It covers dependents who don't qualify for the child tax credit, such as children who are age 17 and above, or dependents with other relationships as elderly parents. So if you're caring for someone and they qualify for being a dependent, and again, you should go back to tab C in your textbook and review those stipulations for dependents, providing more than half support, et cetera, et cetera. You can, they may qualify. So we talked about this child tax credit, and they have to be under the age of 17, credit for other dependents, you can have somebody that is over 17, but it just falls into a different stipulation, different bucket there. Notice that you cannot claim the credit for yourself or for your spouse. As needy as your spouse is, and as much as you take care of them, unfortunately for you or anyone else, you cannot take that. I'm not going to talk about the common errors that are involved. It basically talks about making sure that you ask certain questions when you're in the interview. So we're not going to talk about that. Otherwise, I think that that gives us a closure to this. I would review this summary things, the things that we just talked about. I'm going to produce again another video and talk more about what is required under the calculations.